Quick disclaimer, this video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing here should be considered financial advice. Always do your own research and understand the risks before investing.
Welcome back, everyone, to another Bitcoin update. So we are still trading inside of this trend that we have been talking about for the last couple of days for some of our updates since the 19th of March, which is what we said in the last video. I wanted to shorten it up a little bit more for a more of a shorter time frame, just because we have seen our longer time frame in last video, and so far that is holding it pretty well with the resistance zone as well. I wanted to add this trend line in for today's video so we could see some of the scenarios in which we could possibly be taking for this as well. So currently we have had this sell off in the past couple of hours, or really since about the past day or so, and it hasn't really changed much just because we are still above this swing low, so we could technically still be within our support zone till here. However, once we do break below the swing low, it becomes a little bit more likely that this B wave bounce that we were expecting did indeed just top over here, and we could have been in the start of this C wave, or this larger degree 1, 2, 3 wave move down, where it can either be a extended B wave or a fourth and a fifth wave for another low as well. Now we won't really know how that plays out until we exactly get to this larger support zone down there between that 60 to 65,000 as well. Another thing I want to keep in mind is this could always just be a 1, 2, 3, 4, 5 wave move down, in which we could test this trend line around that 67,000 range, in which we could form that corrective ABC up, and then we can find that rejection as well. That is also something that could play out, and it makes sense on the liquidity when we also go out to check that as well. But once we break below this swing low in this trend line at 67,000, well, it becomes more and more likely we are indeed in the start of that third wave or that C wave to the downside for either a 4 and a 5 pattern to the downside, or just a extended B wave. Now, on the shorter time frame, if we go here, we haven't really seen any 5 wave move up yet. It's just been kind of dead cat bounces before obviously going lower again, dead cat bounce, lower, dead cat bounce. And it seems like this could all be a 1, 2, 3, 4, 5 wave move down. Maybe we do go a little bit lower, and that is keeping it alive if we are indeed going for this extended B wave before getting rejected. But other than that, there isn't really too much to talk about that other than just our resistance zone between 70,000 to that 74,000 range, which is exactly where we got rejected from. So technically we don't really need another higher in that B wave. This could have been all of it right here, but it would look more of like a 3 wave move if that were to play out, in which that would be a 1, 2 setup to the downside for that third wave. But obviously that does not need to play out as well. And if we go over to the liquidity, which we will start on that first, if we refresh this on the daily, we now have a lot more shorts compared to longs. This is the zone I wanted to point out back here too. If we go to that 7-day, so over the next 7 days, we have that zone between that 66 to 67,000 range of that liquidity, which aligns very well with that trend line, which is why I said if we do break below a swing low and we head to that trend line and we just liquidate these longs, that technically could be all of our 5th wave to the downside, and then we could have that B wave extension up, in which we could liquidate these shorts up here before going lower as well, just because this main liquidity area is that 72 to that 74,000 range, which we have been talking about for the last couple of days, in which if we were to come up here, liquidate these at 67,000, 66, 67,000, bounce off that trend line, and we head higher to liquidate these, in which we could come back down to liquidate most of these longs as well. If that is indeed the scenario that is playing out, it makes sense liquidity wise, but obviously just because it matches with the liquidity doesn't mean it has to line up. We just kind of have to let price action do its thing, look at the trend lines, look at support and resistance and swing lows, and just see how price is moved by it. Is it a positive or is it a negative? Are sellers selling more or are buyers buying more? So all we can really look at is the levels and see how the price reacts to it, and then do a possible scenario based off of that. Now if we go over to the RSI, which is something I wanted to check out as well, on the 4-hour RSI we are now getting, we're neutral but somewhat close to oversold. Not too much of a worry. We've seen this multiple times for Bitcoin where it has a sell-off within this large 2-month range that we've been in, where we will have a sell-off, an extended sell-off, and then we quickly get a bounce right afterwards. Sell-off, bounce, sell-off, bounce. And then you can see this trend, sell-off, bounce, sell-off, bounce. So just because we are having a large sell-off does not mean that we are automatically going to be going lower and breaking below to new lows, because it's very normal for Bitcoin to sell off and then bounce back up. And it doesn't even need to hit the oversold territory when it's being sold off as well. What would be nice to see would definitely be a divergence, like something similar to back here, but obviously that is not needed as well. We could just do something possibly maybe similar to this, where we just sell off and just have a quick bounce before going lower. So that would also be something to look out for. However, on the 1-hour chart, we have now hit oversold as we are entering back into this range down here. So now we just kind of have to wait and see how will price react to this past range that we have been in the 23rd of March, where we found that recent support. Are we going to bounce off, or will we break below that swing low and try that trend line down there? On the daily, we have this large daily candle to the downside, which isn't really surprising to see, as we do see these a couple of times on the chart. And like we've been saying in the last video, we broke that daily RSI trend line, and since then we have fell a little bit more after that bounce that we had. If we go over to the heat map, which I think could be somewhat nice to see shorter term, is we have that liquidity building to the upside. So we could always just bounce straight from the zone up. Obviously it's not needed that we need to liquidate those longs or at that 67,000 range, but it would be ideal, and it would make sense for a scenario as well. And it also does kind of show that smaller liquidity, but liquidity is indeed building up on the short. So that's something to look out for on the 24 and 48 hour, in which we could possibly target in the shorter term as well. Yep, on the 3-day, we also have that zone up there as well. That's the main liquidity zone that is kind of showing on the heat maps. We'll see if it's the same on the 1 week. On the 1 week, we still have that zone up there, and we have this very tiny zone at that 67,000 range. So that's kind of where we're in the middle of. We are basically in between that larger zone above us, between that 72 to that 73, 74,000 range, and then we just have a very tiny zone, not tiny, but a zone below us at that 67,000 range as well. On the 2 week, it will also be, yeah, pretty much the same story. That smaller zone at 67 and that higher zone at that 72 to 74, and obviously this larger zone of our swing high at 76,000. But in the shorter term, it maybe wouldn't be as relevant in the next couple of days compared to these two zones between 72, 74, and that 67,000 range. So if we go over to the 1 month, this is just something interesting I want to see. I just want to make sure, yep, this would be the right one. So on the 1 month, we have two zones that were basically in between. One is this large, or the zone below price is at that 50 to that 58,000 range, or I guess 60,000 range, you could say, of that lower liquidity, in our higher range here between that 76 to that 89, 90,000, or I guess this larger one at 86,000 as well. So these are just things that we kind of have to look out for. We haven't really seen too much of a bounce so far. It kind of seems like the knife is still falling, so we'll kind of have to wait and see for some structure to play out and then a possible bounce, but also with the Iran war as well. And if we were for the other scenario that I have, which is the more bullish one, which is the white scenario that we have been talking about, is first we need a break above resistance and we need a 5-wave move. So 1, 2, 3, 4, 5-wave move up, and a 3-wave move down. And ideally, if we break above that 76,000 swing high, that would also be our final indicator that obviously we could be indeed going higher from there as well. But that's way too early to tell. We still have this 5-wave move down that was formed here. It could very well be that we're still extending this 5-wave move, and this could just be a 4th wave bounce. We could get one more low, bounce off the trend line, liquidate the longs, and then go higher as well before getting that rejection and heading lower. So that is a very doable scenario as well. But if we do bounce from here and we do find support and we get a rejection, well, then that also makes sense for this scenario of this 1, 2, 3, 4, 5-wave move down. So yeah, that's pretty much everything for this video. We kind of just have to let time do its thing. We have our resistance, we have our swing lows and trend lines to look out for, and we have our scenarios and price action that could be happening in our liquidity. So yeah, that's pretty much everything for this video. Thanks for watching, and we will see you next time.